Okay, good day to everyone. I'm Kenny Simon, welcoming you on to Friday's Market Wrap-Up by Bretton Academy. So in this session, usually on Fridays, we just want to, get going onto your existing trades, especially because it's a market wrap-up, just to know whether or not we can wrap up our existing trades and then look at some short-term trades, especially higher. And basically, this is what's important for us as well. Just the voice is not good. Okay, give me a second. Testing, 1, 2, 3. Let me just testing, 1, 2, 3, testing, 1, 2, 3. Echo. Let me just check. I think. Give me a second. Let me just sort that one out. Speaker testing 1, 2, 3. Audio setting, microphone. Yes, okay. Should be better now. A second. Speaker system. Testing 1, 2, 3. Testing 1, 2, 3. Is that better, Alfred? Testing 1, 2, 3. Testing 1, 2, 3. Let's just check. Testing 1, 2, 3. Testing 1, 2, 3. Microphone. Okay, testing 1, 2, 3. I think it's better now. I think I've switched it to the right one. Testing. Okay, good. All right. So welcome everyone to the Friday's Market Wrap-Up by Bretton Academy. So we'll be looking into a couple of trades as of now as well. Okay, good. Perfect. Mainly because it's been a bit of an unpredictable week, but we have had some movements. I'm looking at a couple of trades or instrument that we have talked about as well, especially gold. Now, gold has formed a double bottom. So that basically means that this is the reason. Actually, it's not only double bottom, it's got a bit of a triple bottom right here, which basically shows that the 1685 area has been a very, very strong support. So it is on its way up at the moment, and it looks like because this is on the daily chart, so what I feel it's probably best to do is to start afresh with gold on the technical side of it, and then we will go on to the fundamental as well, just to understand what is going on in the States, especially with the strength of the dollar, the economy in the US as well, and how could it actually be impacting gold at this moment of time. So the correlation, negative correlation between the US and gold came back again. So it is back to normal now. So it was a little bit changed, broken, that correlation the last time. Give me a second. Okay, so it's been really hot here in Limassol as well, so that's why I'm actually having a little bit of a sore throat as well, but then it's all good. So at this moment of time, with regards to gold on the daily chart, it looks like it's got another area that it needs to sort of go through or actually find support at. So in my guess, it looks like it wants to go above the 1760 area. Now that 1760 area and above seems to be a very strong support area. So now it is actually just making that movement to the upside. We're looking at the higher time frame first in order for us to gauge what is the overall outlook. Now, the thing is that on the weekly chart, we can see that there is a very, very strong pin bar that already signal the ability for gold to go up, but we cannot see that. We were not able to see that in the other time frame, but on the weekly chart, it's very, very clear that there are some higher highs, higher lows, not so much higher highs as yet, but then it is building up to be the higher lows. And that low right here is built by a very strong pin bar candle with a very long wick. And this is a reversal type pattern, candlestick pattern. And that you can actually see only on the weekly chart. So that is a good confirmation that it is unable or exhausted to actually go down, and there is a reversal that is going up. So when that has actually happened with the weekly chart, as you can see, it is now giving the movement on shorter time frame to actually go up slowly. So from 1 hour, 30 minutes, even 4 hour. Sorry about that. Excuse me. 1 hour chart, 4 hour, and all that. It is proving to actually be higher and higher, and it's got a strong sort of movement for gold to the upside with the body of the candle as well. Now, this is on the 1 hour chart. On the 4 hour chart as well, as you can see, it's quite strong on the body. It's less on the wick as well. So what we needed to happen is for it to go above the 1760. Now it's trading at 1756.70. Now, the way I look at it is if I were to take this price out, as of now, even though we're looking at the 4 hour chart, as of now, it may have some ability to go up a little bit more, but we need to be sure that it's going up to create a stronger uptrend. At this stage, it may be going up, but correcting as well at the 1763.99 area, mainly because it is the opening price of this candle. Also, on the 3 lines right there, it would actually be reversing most probably following the 50 EMA as well. So yes, if you are actually buying, yes, no problem. But then I find that there may be a risk at the 1763. So in any case, it's probably better for us to exit at 1760, 1761, something like that, but not let the price go to the level of 1763.99. Basically, it's the opening price here, closing price of that other mother candle as well. So this is a very significant level for you to exit before the price touches that level. So that's why for me, exits are the most important thing. So whatever that you are doing at this moment of time, it doesn't really matter. But if you are already buying, make sure you are exiting at 1760 at least, or 1761, doesn't matter. But as long as you're exiting before it reaches that level right there. Okay. Sorry about that. It's just not been good with the throat. Okay, so US, we don't, probably not oil at the moment, but GBP USD would probably be good for us to talk about as well. It has actually hit certain, I think, level right there for the ones who are selling. I think it actually went to that level, and basically I've given a sort of hint to actually exit no matter what you do. If you're selling, exit at 1.3830. So if you've exited at 3830, you've been selling, then you probably be already profiting. You're still profiting at the moment as well, but it's probably good to actually get out or exit the trade if you are actually selling at this moment of time, because it's probably going to be experiencing some reversal quite soon, because it's actually at the level where we might actually find reversal. Excuse me. And so now we're looking at GBP USD on the daily chart. It is still, we've talked about this before, where along the days and the weeks that we have actually met in our webinars, we have actually seen a lot of resistance level for GBP USD and GBP crosses, right? And that's basically, it sort of mirrored the gold in a way. And this is basically quite interesting to look at. And right now, at this moment of time, it's trading on the daily chart at 1.3800 area, which is very close to psychological level. coincidentally, it's also at a very significant support level, as you can see, based on this one here and here. So that's basically anywhere between 3800 psychological level to 3780 psychological level. So we are a little bit too close to these levels at the moment. So it's probably best for us to exit our selling type orders or trades for GBP USD. Now it is doing quite well in terms of respecting a lot of levels and things like that. So I would guess that it would actually be looking like it might actually reverse anytime soon. So if we were to go on to the stochastic right here, just so that we want to see whether or not there is any sort of divergence that is going on. Now, at this moment of time, we have got this low right here. It's actually at the same level, and this low here, it's a higher low. So that itself seemed to be a divergence on the daily chart already right there. Okay, and right here. Okay, roughly. So that is signaling a divergence that could actually take place. And then if we look into price action itself, it is already telling us that we are at a level where there has been loads and loads of very significant significant support and significant reversal to the upside. So this could potentially be a reversal as well. So no matter what you do, it's probably best for us to exit our trade for GBP USD at this moment of time. Okay, is that clear, effort as well for GBP USD? On the pattern perspective as well, we are seeing if at all it is actually going to be correcting itself, then we may have some limit as well. This is on the 4-hour chart. We may have some limit to the 3820s area. So if you are actually exiting this trade and thinking of buying once it actually starts to reverse, then it's probably best for you to buy at the 3790 or 3810 area and then take it further later. It's just that the way it looks is that GBP USD or GBP crosses may actually be forming reversals, and from a patterns perspective, we are seeing that as the C point. So there may be another A here, B, and then C again, and then boom down again. So that we are looking at riding the downside of the C to D pattern. So whatever that is happening to the upside would probably be the B to C point, the B to C reversal move of the ABCD pattern going down, because it has actually been really nice riding along this whole movement, because there's a lot of ABCD pattern. So here, for example, we have got AB here, see A to B, and then C point here, and then downwards. But the other thing that is quite good for us is that when we have loads of reasons to list down, that could actually be what you call that, supporting our reasons that this might be a reversal. So number one was the psychological numbers. It's just too close to psychological numbers. Number two, it is actually mirroring other areas that has been proven to be very strong support as well. That's number two. Number three, you can actually go on to the Fibonacci tool and pull this one up all the way up here. Okay, I still you're putting the A to B on the Fibonacci. And you can actually see that if at all it were to actually drop and find support a little bit later, not here, we also have this area here at 50% to be a potential area that it could actually be supported again. And that does actually mirror quite accurately the other places where it has actually sort of got supported and reversed and bounced upwards. So that was at 3780 area as well. So the 3800 area, 3780 area would actually be a very strong support area for GBP USD. So just make sure you are aware of these areas as areas to actually exit before it goes there. Most probably it might reverse in that area, but we'll take a look today and see what happens. So that's for GBP USD. At this moment of time, I'm still hanging on to the CAD JPY. It is still going on. I'm still expecting lots of changes politically and economically in oil, and that would actually impact Canada. And Canada as well has got some data, and things are not looking so bright as well in Canada at the moment. And also I see a lot more interest in getting into the JPY as a safe haven as well. So hence the reason I'm not really getting onto that. It has actually hit quite a number of stop losses as well. I have stretched my personal stop losses even more, but that is my risk to take, and I'm willing to take that risk based on various reasons on the especially on the fundamental side of it. On the technical side of it, it has also gone and found sort of challenges in all these areas right here. So the C point right there, as you can see, is exactly at 50%. We've talked about it last week that it might most probably be at the 50% there and then start to reverse again. Now, if it does actually reverse at that area, it's also a good sign because it's not only making it clear the ABCD pattern, I have to adjust the ABCD pattern, but then once it actually reverses at that area and then come down from now on, start coming down, that could actually be a sign of it forming the second shoulder on the right shoulder of this head and shoulder pattern. So this is the head here, we've got the shoulder right here, and then that's the second shoulder. So that could then signal more downfall, especially if it start to break the neck area right here, which is the 85.70 and below. Once it does go down there and then make all this move, then we are expecting a very big sort of move. It's also part of a sharp-like pattern as well. So hence the reason I've been still keeping this trade. Of course, I've probably entered a little bit too early as well, but the exit is really important. So the exit, it does also depend whether or not you've adjusted and stretch out your stop loss as well, or you want to cut your loss early, or you want to leave it and stretch out your stop loss because you are aiming at it coming downwards like myself. So it all depends on your risk appetite as well, because it does depend on how you entered the market with what kind of lot sizes as well. And then maybe you don't want to keep that trade, you want to cut your loss early, which is fine. It all depends on your personal money management and risk management side of it as well, okay, and your risk appetite mainly. So that's CAD JPY. Now USD JPY has been very interesting. It has actually gone above, I think, some areas, but then it's looking like it's finding lots of resistant area at this moment of time. It's got some support as well to the upside, but if we are looking at a shorter time frame, let's say like 4-hour chart, we could see that reversal is happening. If we go on to the 1-hour chart as well, we can see that it's governed more by resistant levels, and it has sort of gone sideways on the 1-hour chart. But what we need to actually look at the shortest period of time is for it to actually go under the 11020 psychological number. Now it is trading at 110.36. So it needs to go down a little bit more to break out from all this area of support that seems to be quite strong as well, especially on the 1-hour chart, because it's on, it's got a lot of touch points as well right there. And then and the 4-hour chart as well, it's looking like it has made that reversal from the very top peak there with a very strong bearish mother candle. And then we see all these wicks to the upside as well. So this is gearing towards a downward type movement as well. And it's looking like it might want to come down and then bounce up, but then it wants to find an area that it can actually find support at a best price as well. So I would think 11020 area is an area to watch out for as well, because this one here is 110.16. So if you're actually selling, make sure either you're exiting now or you just want to wait for the price to solidify and make this a real good downtrend to actually ride along. But it is a little bit too soon to decide on that. But we have got some double tops and things like that. And we do have a lot of bearish candle waiting for us and also selling zone. So if I clear out all these ones here, you can see that even on the daily chart, you see all these bearish mother candle are quite significant, very, very strong ones. So I would think that at this stage, it might want to enter a selling zone still based on this one right here. So I will So here it is just literally entering a selling zone following this candle right here, but we've got various area of support to watch out for. So I will lay some blue lines as your potential support. This is based on daily chart, of course, but we can go on to a lower time frame as well. So here I would think that on its way down, of course, we have already talked about the 11020s area. So we want to mark that area just so that we know that it is based on psychological levels as well. And it's really important. So your next sell would probably be best at 11010, right? So 11010, let me just put it here. So if you are thinking of selling, it is going into the selling zone right now already, USD Jpy. This is based on the daily chart. So 11010 would probably be a little bit better selling price right there. So then we look into the area right here as well as support. That would actually be at 110. So 10 and then 109. 90, I would think, would probably be better to exit. So not too much right there. Let's see. That's about 20 pips or so. But once it actually goes under this box, I think we're going to see more selling opportunities, and then we can ride along some bearish candles as well. But at this stage, it does look like something might drive the price downwards, but not just yet. Maybe not today, maybe from Monday onwards, it would actually be more active because market's going to be closing today. So it might actually be doing that. So we want to monitor the market, but the way I look at it is it's governed by loads of bearish candle already. Okay, so that is basically for USD JPY. I've also marked it on a different on another tab. Okay, so let's just see. We've also spoken a little bit about Euro CHF, NZD JPY as well. So I think it's probably best for us to take a look at the heat map as well, just so that we get a bit of an idea. Give me a second, let me just check. Okay. Let's see. So now we are on daily effects. Let's say they've been talking a lot about crude oil because of the price fall and because the stockpile has actually gone up. So that would actually be, we're probably looking at more bearishness for oil. We'll discuss that on Sunday especially. And gold price, it says here, rebound chances dwindle as taper talk bats mount. So that does also tell, giving us a signal that this is not really going to be that very clear picture that gold is going to go up, mainly because it's battling with the taper situation in the US. So it's actually on limbo at the moment. And the way I look at it is GBP crosses is actually mirroring that whole movement as well. So the correlation between GBP crosses and gold is quite clear actually. So it's doing quite well in that area. But we want to also look at what's happening with the Australian dollar. Australian dollar, as it says, it eyes consumer confidence, but today it's already the 13th. So these are all not updated news. So give me a second. Yeah, now it's better. Gold outlook. Now it says, you see, the whole thing changed. May rise as week wraps up. But the way I looked at it as of this morning, this news here is quite recent. It is recent, it's as of today, but it is not really safe for us to actually really trade gold as well. I have seen that it does all these rise up, but because of the, not only on the 4-hour chart daily and all that, I've also looked at other reports by other banks, and it looks like there is a possibility that they want to drive the price very high for gold, maybe in the upcoming weeks, but then let's say second week onwards, because we are actually already in August, and then as it gets into September, October, into the monsoon wedding timing. So there's a lot of, because usually historically the monsoon wedding and the Indians as well as Chinese also, they start buying the gold usually from either end of August, beginning of September onwards, will actually have a rush in all this buying, especially Indians in India for the monsoon wedding period. So this has actually been something that has actually occurred, quite steadily. So the way I look at it is that this 1 or 2 weeks would probably be the best time to pull the price down first before it would rise quite a lot. Okay, so maybe a reason is to buy low. So that is where we can actually ride the downside first and then probably look into upward trend. So I'm expecting a lot of fundamentals to weaken further, to strengthen the dollar so that it could actually weaken the gold. So this is what I can see, and it is actually quite clear. Even technically, we can actually see that we are probably going to come into the bearish territory right here, see? And again, this would actually be a good reason to find that if it's going to be a support and then to start to go up, the 1734 historically, 1730 especially, has been very, very popular for many, many years. When they want to drive the price of gold downwards, it has always been in that region of 1730 to 1740. And that is basically what has actually happened so many times over. And then that's reflected as well by this bullish candle right here, as you can see, and that is exactly at 1740 price as well. So that's where I'm looking at what could actually happen for gold, because here it has sort of given the hint that may rise, but sometimes it is a timing as well. So this could actually be may rise by in 1 week, 2 weeks time, may rise. So, but then they got it right that it has to also be based on the US data right there. Okay, so gold is a little bit interesting, meaning that you can actually trade as of now as well until it goes to that upside there, but it's at your risk. But it's probably best to look at the downside first, mainly because of the way the market works is they want to drive the price down as of now, so that you can buy it cheap. We can also see that we've got a nice bullish candle right here. That is also the support area. So for pattern traders like myself, we want to see that reversal right there. So once it actually reverses there, we can take that as the C point reversing at the 50% area. So at least if it does want to go up more driven by something fundamentally, it could also go up to the 61.8 area right there as well. Okay, and that is the 61.8%. I'll do that in rate. Okay, so that is basically it for that area. The other thing as well is that if we take A point here, B point here, the C point is there. And let's see how clear the C point is, which Fibonacci ratio, as you can see, is exactly onto the 50% as well. So this basically gives us some hints of how low it could also go, but maybe not immediately to go as low like that. But I don't think it's going to go that low, but I think it would most probably be going to the 1667 area or even this area right here. Yeah, there, probably. So this would be a blue color as well. Give me a second. 1682.19. So there you go. That is basically it. We also see that if it goes lower than 1682, we've got very strong bears waiting there as well. So more selling chances right there. You can see all these bearish candles here. And yeah, this is basically it. And, you know, from a patterns perspective, it also looks like an M-like pattern on the way. So that basically means that this here could be an ABCD right there. And could actually aim, you know, worst case scenario to actually fall 15 area, especially. That's also a very significant psychological level for loads of investors and traders out there. So this is basically a M-like pattern as well. And usually at the end of this pattern, then it has the ability to go up. But coincidentally, it's also got this reversal area right here, which is basically where it went up as well. See, and right down here too. There we go. So it's an ABCD pattern, but also has got the M pattern built in. And this is basically it. This ABCD pattern is this side of it. That's usually the X, A, B, C, and then boom, D. So it has also triggered the centroid area right here as well. Expected, yes, but we want to look at what's going on now as well. But as of now, as I've mentioned, it's trading in within the red box, so it's going up there, coming down, going in, and all that in within the red box. So it might firstly go up and then go to the 1763 area. We want to know whether or not it reverses from there. If it reverses from that area, go up first and then reverse from there, then it has more likelihood, probability for it to go down much more. On a bigger picture, yes, it is giving a lot of room to the downside, actually more than upside, but overall pattern from a big perspective, it is actually signaling if it does go down to this area, then it will shoot up again. But at this moment of time, I think a zigzag going down. So that zigzag will give some opportunity for the buy, but then it's lower high and lower low. That's the most important thing to know. So we want to know whether or not price, whether it goes up or down, especially if it goes down, whether or not it will break this 1682 area. If it goes down aggressively, breaks this area, then the downtrend is more solid for gold. Okay, but I think this is what may actually be doing, is to pull price down as well for the shopping spree to happen for, things that are happening in India, especially. I mean, there's still a lot of gold buying right there. Okay. All right. There you go. So that's basically it. Any questions on any of your trades, Alfred? Let me just check. Yeah. Okay. Yes, of course. Let's take a look at GBP JPY. I have it here. Yeah. So GBP JPY, interestingly, it's also falling and it's going into the bearish territory. And as we have also traded actually many times over this area, this zone under the 15240 onwards. So there's a lot of traders that are already into the sell right now at 152.40 because that's a trigger price as well. Because it is now into the zone where we have these three bearish candles as well. So it's quite a safe place to actually sell. And then you can exit actually. Maybe you want to take it a little bit slow and not exit too aggressively. So maybe 15210, you can actually exit 15210. You can sell now, exit 15210. That gives you about, I think, about 20 pips or so. Yeah. So here, if we go to average directional movement index, you can see that it's really strong, even on the 4-hour chart. Whatever is falling as well, very strong. 4-hour chart, daily chart. Daily chart, not too much, but anywhere between short to sort of medium term, half a day kind of thing, it could actually work with the sell. Yeah. But it might find support though. But then if you want to do a bit of a sell for now and make about 20 pips, I think it's possible. Trading now at a sell and then exiting at 15190. Okay. Or if you want to be a little bit safe, maybe you want to take, yeah, 15210 actually. That gives you 30 pips actually. It's not too bad. Yeah. So exit at 15210, sell as of now, and you would probably be potentially making about 30 pips or so. Okay. Yeah. So that's for GBP JPY. Let's also just very quickly go on to this area right here. All right. There's a lot of attention to JPY, but more JPY buying as well. So I think this does also show us that the safe havens are getting in. So GBP, especially for the yen. Okay, this is for GBP. We just talked about GBP JPY. You want to know about GBP USD, right? GBP USD is a little bit risky. Yeah, because we talked about GBP USD before, but now the one that gives us a better opportunity for the sell that I've mentioned at 15240, or now you can actually sell and then take profit at 15210 is for GBP JPY. Okay, so that's GBP JPY, USD JPY. Not too much yet, but I think the clearer one is actually GBP JPY as of what to trade for now. But it might actually reverse quite soon as well. We are seeing the ones that has 4 dot is the first one on the top 10 movers, and that's CHF Jpy. So it seems to be clear about on the sell of CHF and the buy on JPY. That means uptrend on CHF, but sorry, downtrend on CHF and more uptrend movements on the JPY. So let's take a look at the heat map. just so that we get an idea of what's going on in general. Does not really have dark blues and dark red, but we go individually to certain pairs. It's building up, but it's not really that strong yet, giving us very clear, solid trends as of now. Perhaps it's also Friday, but we need to wait until the London Open as well. So we go on to the action buyers just to take a look at what goes on there. Yeah, it's a bit slow. We see AUD, CAD. We can actually take a look at CHF Jpy just to see how clear the trend is first. From our perspective, CHF Jpy, USD Jpy, Euro CHF. I'm just going to change that. CHF Jpy. Right here, let me remove that and also that. Okay. All right, so at a glance, if I'm looking at CHF Jpy, it looks like it could potentially reverse as well, but then it is definitely sort of on the bias to the downside downtrend. Let us just see what's going on, whether we can get better picture and bigger time frame. It's not that clear actually. It's got some area to watch out for, especially with the support there, 119.38 or 119.39 area. Also, if we go lower, I would think 119.20s area as well. So yeah, it's not looking, it looks like it might actually reverse for the CHF Jpy. So let's take a look at the oscillator, sorry, the stochastic, to just see whether or not we're expecting any clear sort of divergence as well. Would probably give us a hint that it might want to reverse. Yeah, it's quite clear here. You've got a bit of a divergence here at the top. This is upper high, higher high, and this one here is the same level. And we look at the one below here. This one here is a higher low. This one is a lower low. So very clear divergence. So that could potentially be a reversal. That's on the daily chart. Let's see on the weekly, sorry, on the 4-hour chart, whether or not we've got similar divergence. Now, it looks quite, it is also a divergence here on the lower side. This one here, lower low, and this one here, higher low. So yes, very clear divergence. So I think the divergence could happen quite soon because it's already on the 4-hour chart. It shows that divergence. It's also very clear on the 1-hour chart as well. This one here is higher high. This one here is lower high. So it's very clear divergence on this one here as well. So this shows that in any moment of time, it might actually reverse. So there you go. And if we go into the 1-hour chart, look at the signs right here. You've got candles having the wick to the downside as well. The bearish candle is finishing right there. That is exactly on 119.49, which is 1 pip away from 119.50. So that is another reason we checked on the stochastic, showing in different time frames, 1 hour, 4 hour, and daily. All 3 time frames shows divergence. Coincidentally, price action wise, it is actually very close, only 1-2 pips away from the 50 psychological level. So that is another sign it might actually reverse. The other thing can actually do as well is to pull your Fibonacci from the low to the high, and you can see that it is on very close Fibonacci levels for it to reverse as well. So yeah, it's a sign for sure that it it wants to actually reverse. So we can see the candle behavior as well is weakening to the downside. We have got this area right here, right now, the 119.50, 119.45 area as well, where there's been a bit of a support right there. So I think this would actually give us more rise to the upside. And what I see happening for CHF Jpy as well is that once it actually reverses, we want to take a look at whether or not it wants to go inside this bullish zone by this very bullish candle that I can see right here. So that marks the bullish or buying zone right there. Okay, that starts at 119.52. So if you want to start buying, it's probably better at 119.60 area. So I will mark this yellow. Okay. 119.60 would probably be a good pending order for the buy CHF Jpy, but not yet. Just we want to monitor the price first, let it go down, do whatever it needs to, and then let it reverse upwards. If it does reverse upwards, then it will trigger our pending order buy at 119.60. Now, as it goes up and up and up, I think we might have more buying opportunities. We just have to take a look at certain areas like this one here, because this is support, could be resistant too. So we want to take a look at that area and also that area. So that area is at 119.80 area. So I think if it goes up and then it triggers your 119.60, then you can exit at 119.90. That gives you about 30 pips or so. And then as you go higher, basically, it's probably best to trade cautiously with the CHF Jpy as well. But I think there is a chance to get that 30 pips there as it giving us signals of reversals at this moment of time. Okay, so that's CHF Jpy. Any other questions? You guys okay so far, Alfred? All good? All right, perfect. Okay, I don't see too many that we should actually be looking at now. Also because it's market wrap up, we need to clear certain trades as well as much as we can, exit as best as we can with profits especially. Okay, good. All right. So yeah, that's basically it. And not to actually overload the trade as well. It's not a kind of environment for many trades today as well, because it's a lot of exotic pairs are actually moving. So, you know, without the dollar, so the liquidity level is quite low. Yeah, that's right. USD Jpy, GB Jpy, and Jpy crosses, as you can see, all of them. But it's not reflecting the same for all the JPY crosses. So like CHF JPY, it looks like it wants to reverse. So we wait for it to reverse first, and then we take that buy type trade. Because a lot of traders, what they would actually be doing right now is to sell and keep selling and believing that it will actually fall a lot more. But then it looks like the current price is just very close to some very strong buying area, so it might want to correct. So if it does want to correct and then we see it correcting, reversing, it's probably best for us to ride that trend a little bit first, because it might want to go lower much more, but it wants to correct at some point first, and it is at a price that it wants to correct that reflects this very strong candle right here. This is a candle, bullish candle right here, that is about in length about 60 pips, right? Not too much, but it is an area to consider whether or not it wants to reverse there. Maybe it doesn't want to reverse there. Maybe it wants to reverse a little bit lower. Maybe it wants to reverse here. But still, the hints are there for it to want to reverse. So it may actually reverse at anywhere it prefers to be, but the hint is following all this bullish candle. Could be any one of this opening price of this bullish candle. You see, so it can be here 1, 2, 3, 4, 5. So these are all the bullish zones as well, actually, at this moment of time. So it shows that it's got a lot of reasons that it might want to go up, at least technically. But if it is driven by fundamental as well, something is happening, and then it's triggering more sell of JPY and buy of CHF, then it would actually happen that way. But I see that it would most probably reverse at any moment of time. Okay. All right. That's basically it. All right, guys. If no questions, I'll end the session for today, and then you guys can direct message me and for anything. It's not a very nice, very liquid market that we're trading as of today. Today, it looks like it is slow. You've got selected pairs only that might want to actually move, but not move too much as well. There's a lot of sideways going on as well. Okay, but I think Monday onwards will probably be a bit better. We need to look at the fundamental calendar as well, but we'll discuss on Sunday on the commodity side of it. And people are gearing towards commodities again, but not just now, maybe another week or so, almost 2 weeks, then we will see gold prices, oil prices, copper, all this kind of precious metal as well. Okay, guys, so that's all I have for you guys. If anything, as I've mentioned, just message me directly with your screenshots as well, so I can help you out. And with that, I want to wish you guys a great weekend. Enjoy and rest well, and we'll see you guys again on Monday. And thank you very much for attending my webinar today. Take care, guys. Thank you so much. Bye-bye.